Ladies and gentlemen, welcome. My name is Alex Dvorkin and I'm a managing partner at 4D Capital. Today's going to be very interesting. We're going to be looking at why Elon Musk will not be getting his $1 trillion pay package that his shareholders just agreed on. I believe you'll find the analysis quite fascinating because we're going to be looking at it from the mathematical angle that we use. And I'm going to show you exactly what Tesla is going to do going forward and why the pipe dream that Elon Musk is selling is not going to materialize, basically. So very quickly, once again, my name is Alex Dvorkin, managing partner at 4D Capital. We specialize in a very unique mathematical approach to the stock market, where we analyze the market and individual stocks in multidimensional space. And when we do, essentially, perfect order emerges. On top of that, we've developed a number of very powerful timing indicators. And when we combine both of those together, we can very often predict exactly what the overall stock market or individual stocks will do going forward in both price and time. And we can typically do it on multiple time frames. I personally believe our work is nearly identical to Jim Simmons and what he was able to accomplish at Renaissance Technologies. So our goal and our capability basically allows us to identify the next NVIDIA, Apple, Bitcoin, Tesla, Microsoft, and so forth. So with that out of the way, let's take a look at Tesla and what Tesla shareholders just agreed on for Elon Musk. So this was basically a $1 trillion pay package, right? And these are the benchmarks that he has to hit in order to realize it. I guess it's in various phases of it, right? So CEO must attain both the market value and operational milestones for each of these tranches. And it's pretty impressive, as a matter of fact. So obviously Tesla has a very high level of valuation. Many would argue that it is extremely overpriced, highly speculative, but it's a little difficult matter to determine at this point in time because Tesla does have a lot of upcoming, technologically speaking, revolutionary products such as AI, robotics, etc. So it's very difficult from the fundamental perspective to actually determine what Tesla is worth at this point in time. That's why when I show you the mathematical output of what our software is indicated Tesla is going to do going forward, it's going to be much easier to determine whether or not Elon Musk is going to be able to get this pay package. By the way, it's not going to hurt Elon Musk in any particular way if he doesn't achieve these milestones and get his $1 trillion, right? It's more of a check mark. He doesn't need the money, let's put it that way. But nevertheless, so as you can see, so let's concentrate basically on the revenue milestones that he has to, or I'm sorry, not the revenue, but market capitalization milestones that he has to achieve. So Tesla's current valuation is at approximately $1.5 trillion, plus or minus a few billion, correct? And so in order for him to achieve the entire package, I guess he doesn't have to hit 7.5, or maybe he does have to hit 7.5, 8.5. I don't know the exact details, but let's assume that he only has to hit 6.5 trillion valuation. So that's approximately a little over 300% increase going forward. I believe it's 320, 330% increase if I'm calculating correctly from today's valuation level, correct? So today's stock price is $450, and that means it would have to go to $1,800 for Elon Musk to achieve this particular threshold. So with that in mind, let's look at our mathematical composition for Tesla and see what it says. Basically, we did an update on Tesla a couple of months ago, I believe in early September, but so this is more or less a recap of that. What you're looking at is a cycle composites, and at the top and the bottom. And basically cycle composites are very simplistic, or what you see on the chart in front of you is a very simplistic representation of a very complex mathematical concept where we scan the chart back in multidimensional space and then we project it forward. And based on that, we are able to identify important tops and bottoms. So the bottom one is responsible for the bottoms and the top one is responsible for the tops. Moreover, there are typically multiples of them running in any given market. So I use Dow Jones as an example. Always Dow Jones has two lower composites and two upper composites. But if you know those and you can put them together properly, you can essentially replicate what you see on the two-dimensional time and price chart. Okay, the lines you see are cycle clusters. I'm not going to get into the explanation of that, but basically cycle composites get us into the neighborhood of for upcoming tops and bottoms. And by the way, we can narrow it down. This is a long-term chart, but we can narrow it down all the way to intradays. We continue to zoom in and we will get different shorter term cycles. But anyway, so the composites get us into the neighborhood of an upcoming turning point, and cycle clusters give us the exact date. Okay, so for Tesla, two very important things here. Please pay attention to this particular major cycle top that we are currently increasing into, right? Oh, I'm sorry, not this major cycle top, this mid-cycle top that we're currently increasing into. Actually, well, it could be either one of them because of the margin of error associated with that. It's kind of we're sitting in the middle of it basically. But as you see from the past iterations of it, we hit major cycle tops here and here. Okay, but I think we moving into the mid-cycle top right here. And once it is put in place, Tesla is going to decline into this major cycle bottom. This major cycle bottom is much more important than this particular top. So we anticipate a significant decrease into this major cycle bottom. And that arrives in the fourth quarter of 2026. Yet another confirmation sign that we're going to have a significant decline in Tesla is this particular gap down, gap higher. That going to have to be closed in the upcoming couple of months. Okay, so let me show you the calculations, and this will give you a clear indication of whether or not Tesla is going to get its paid package, or I should say Elon Musk is going to get his paid package. So once again, if we see a little bit higher high here, which most likely not going to happen because of the overall composition of the stock market, which I'm not going to talk about today. For those who know. If we do, then it's going to be a major cycle top, and then the subsequent decline is going to be much more powerful than what I'm about to suggest. But if we are heading into that mid-cycle top, then we're not going to see a higher high, and the stock's going to begin to decline into the fourth quarter of 2026. And according to our mathematical calculations, the bottom is at approximately $200 a share, which is the level we've seen quite often over the last couple of years. And once that bottom is put in place, then, only then, Tesla will begin to increase quite substantially into the next major cycle top scheduled for 2029. Okay, so let me show you. So this is going to be the bottom. Whether or not we're going to see a slightly high or not doesn't really matter. We're going to close this gap. We're going to fall back into $200 a share according to our mathematical calculations. By the way, I know this doesn't make any sense for most people, but actually all people, because nobody else uses this kind of a technology. But according to our calculations, once again, the bottom in Tesla is going to be at approximately $200 a share. If it breaks below that level, it becomes very, very problematic for this stock. It can fall much further. Let's put it that way. So anyway, $200 according to our mathematical calculations. And here's the beauty of our software. Not only can we project where the bottom is going to be, we can then come back and essentially indicate to you what Tesla stock is going to do going forward. Once that bottom is hit and the Tesla begins to increase into the next stop, we know the projections based on the recent mathematical composition of this particular stock. We know where that top is going to be. Okay, so recall, Tesla has to go to $1,800 a share in order for it to be, or for Elon to qualify for that $1 trillion final phases of the payment. So at least according to our calculations, next stop in 2029 is going to be at approximately, it's possible we're going to stop here, which is at approximately $604 a share, but most likely because darker green regions you see in our charts indicate higher mathematical probability, much higher mathematical probability. So let's say it's going to go to, 846. Let's make it even. Let's say it even goes to $900 a share, which is going to be quite a significant return on investment if it goes back to $200 a share and then goes back up to $900 a share within 2 or 3 year period of time. That's going to be quite a significant return. 300-400% approximately, right? So not bad, but it doesn't allow those benchmarks to be hit in order for Elon Musk to be qualified. And at least in our work, it's mathematically impossible for the stock to increase into much higher than these levels. Okay. Now, I know many of you will say, well, okay, what happens after 2029? Well, everything goes to zero. If you know our war forecast and you know our nuclear exchange forecast, you know that according to our mathematical work, that's the final top for the overall stock market, and that's when the nuclear exchange between Russia and China alliance and NATO members will take place. And at that juncture, any sort of evaluation becomes meaningless, because there's no stock market, essentially, is what I'm trying to tell you. So unfortunately for Elon Musk, he's not going to get his trillion-day payout, at least according to our mathematical and timing work. But I think, I'm pretty sure that Elon Musk is going to be just fine. He's not going to hurt financially. Let's just put it that way. So that's it for today. Thank you very much for your time. We do have a free 30-day trial associated with our work. It's not going to last much longer, maybe one or two more weeks. If you would be interested in getting one, please request it. The link is in the description of the video. We also have a webinar coming up next Friday, November 14th, I believe, 12 p.m. Eastern Time. We talk about the overall composition of the stock market, which we typically don't do because that's our bread and butter. We also talk about how we calculate the market in three-dimensional space, and we also showcase our software and how it is able, for example, to scan the entire S&P 500, find only the stocks that are about to put in major bottoms, and then increase quite dramatically going forward within a relatively short period of time. So just a lot of fascinating stuff. If you want, once again, the link is in the description of this video. And I think that's it for today. Thank you very much for your time. Have a wonderful weekend ahead, and we'll be back with more analysis next week. Bye-bye.